5 days, only 5 days in the last 2 years have interest rates been lower than they are today. And of those 5 days, all 5 of them were in January and February of 2023. So in the last basically 700 days, this is the lowest interest rates have been. A great sign for all of us home buyers, home sellers, realtors, title agents, anyone and everyone in the real estate economy. This is a great news for us. So today with CPI, inflation data, came in and we saw this big headline media news. Inflation rate is now at 2.5%, which we've been saying is going to happen over the course of these past few months. That being said, even though headline inflation dropped to 2.5, the lowest it's been since March of 2021, again, the lowest inflation has been in 3.5 years, it wasn't the best report for us. And the reason being is core CPI came in around 0.25, 0.3. And again, we've talked about it. When you annualize out these numbers, multiply them by 12, that's what's going to give you a key indicator if it's a good month or a bad month. So overall, headline inflation, great news, 2.5%. We also know next month, so it's September 11th right now. We also know when the October inflation print comes out. I don't know the exact date. I think it's October 13th is when the inflation print comes out. That is also going to be another great day in for inflation. So mark it October 13th when the headline inflation data comes out. It's going to fall from 2.5 all the way down to sub 2.3%, maybe 2.25, maybe 2.29, something like that. So again, 2.25. That's what October 13th is going to read. So Fed targets 2%. We're going to be at 2.25 next month. Inflation's beat. Inflation is good. However, seeing these core inflation, that's why digging into the data is going to be super important now, because now inflation's not really going to bring down interest rates as much anymore, because you see these core CPIs coming in at 0.3% month over month. That's actually going to hurt us because headlines now at 2.5, great, we're here. How much lower are we going to go? 1.5, 1. Sure, if that happens, yes. Fed's going to need to start doing things. Fed's going to need to start lowering interest rates. Fed's going to need to start stimulating the economy. That's going to take another 6, 9, 12 months to kind of get that low. So now these next few months are just going to be looking at those month over month numbers. So 0.3, a little scary, little reason why we've had a slight, stall out in interest rates today. In addition, we had last week a lot of labor report bringing down interest rates. So the question we're going to get, or the question we're getting here as loan officers is, hey, interest rates are lower. Awesome. That's fantastic news. But should I wait? I believe interest rates are going to come down. Personally, again, too. Yes, I agree. I believe interest rates are going to continue to come down over the course of the next 2 to 3 years. Yes, I believe interest rates at some point right now, again, if we're offering conventional loans between the 5.5 to 6.25 range, and we're offering the government loans between the 5.25 to 5.75 range, of course, depending on FICO, loan to value, all those different types of factors. Of course, yes, I believe we're going to be 1% lower in a year and a half, 2 years. That being said, it doesn't mean it's not a great time at this moment. For anyone that's locked in a loan in the past 2 years, yeah, you can refinance right now. So lowest interest rates have been, or only 5 days in the last 2 years, they've actually been lower. In addition, interest rates are so good right now that you can even set up no-cost refinances with your loan officers. Reach out to that. Not every loan is going to be a no-cost refinance. I'm saying it's a possibility, depending, again, of course, on your credit score. So when you do these types of things, should interest rates fall again in 12 months, 18 months, 24 months time, guess what? You can then take advantage of another refinance in the future. In addition, after today's CPI print, next week, Wednesday, 1 week from today, the Fed is going to cut rates for the first time in 3 years. Today's CPI print pretty much solidified it's only going to be a 25 basis point cut. It's been a big topic, a big conversation topic, right? Is it going to be a 25 bip cut or a 50 bip cut? Today, again, CPI coming in a little aggressive, even though headline 2.5, amazing, numbers aren't that great, it's going to be a 25 bip cut, right? Then the next time the Fed meets, they're not going to meet until after the election. So about 60 days after that, then we'll likely see another 25 or 50 base cut, and then we'll continue to see that downtrend. However, the market has already priced this in. Think about it. Interest rates a year ago from today, 8%. Interest rates today, 6.11%. According to Mortgage News Daily. Again, lots of factors here. So interest rates are down nearly 2% from 1 year ago today. 1 year ago today, or 9 months ago again, what's the federal funds rate? Which is, again, what the Fed is cutting. Was at 5.5. What's it today? 5.5. So the federal funds rate hasn't moved. It's 5.5, yet interest rates are 2% lower than where they're at. So again, the market moves ahead of this. We have seen interest rates move lower, 2%, nearly 2% lower, in anticipation of this federal rate cut that happens on September 18th. So a lot of people, I'm waiting until after September 18th when the Fed cuts rates. Guess, that is the federal funds rate. That will be cut. That will not directly affect mortgage interest rates. We lead this. We are in anticipation of this. And it's vice versa too. Just before the Fed started increasing interest rates in 2021 and 2022, where we went from 0% policy up to a 5.5% policy, guess what? Mortgage interest rates went from a 2 to 8%. It led it. It was way before it. It's going to be the same thing here. I'm not saying interest rates aren't going to go lower. I'm not saying interest rates are going to go higher. I'm saying, hey, take a look at it. Reach out to a loan officer, reach out to a securitized lending loan officer, have them take a look at your file, have them review it. And then if you're a borrower waiting on the sidelines, this is what you've been waiting for. Obviously, yes, we know that affordability still can be difficult. We know prices can still be high, but it's the best time we've had in 2 years to kind of look for a home purchase as well. So sum it all up, reach out to a securitized lending, have a professional look at your mortgage statement, have a professional look at the options, the possibilities that you may have to possibly lower that interest rate. If you have any questions, feel free to reach out.